Good afternoon, this is Sean Golding with Golding & Golding, here to discuss the basics of what is considered to be signature or other authority for FBAR purposes. The reason why this is so important is that unlike various other international information reporting forms, a person doesn't have to have actual ownership or an interest in a foreign financial account in order to have to report it for the FBAR. FBAR, as we discussed many times, foreign bank and financial account reporting. U.S. persons who have certain foreign bank and other financial accounts are required to report each year on a FinCEN Form 114, even though it's not an IRS form per se or even a tax form per se. The Internal Revenue Service is tasked with enforcement. It's due on April 15th, but it's on automatic extension to October, though that can change, so something to kind of check on each year. And it includes more than just your typical bank accounts, savings and checking. It also includes things like investment accounts, pension accounts, life insurance, pooled fund accounts like mutual funds and ETFs, etc., etc. So what's the definition of signature or authority? Okay, for this, examples are going to be the best sort of scenario. So let's take, for example, account holder one, and they have a foreign account overseas. It's their money. Maybe they had $100,000 and they deposited $100,000 into a foreign account. It's their account. They're the only name on there. It's their money. They're going to have actual authority over the account, ownership over the account. That's different than, for example, signature authority. With something like signature or other authority, someone doesn't have to actually own the account. They don't have to actually own the money. A lot of times when you go to open an account, they'll ask, oh, do you want to add a beneficiary? Do you want to add any signatories on it? So even though the money is not theirs and they may not have any financial interest, they may not even know about it at the time, right? Your grandma might have put you on the account. She forgot to tell you. You're not the primary. You may not have an interest and the money's not yours. But unfortunately, you could still have an FBAR filing requirement if it's held that you have signature and other authority. Two common examples that we see often. Elderly relatives, right? Maybe you're from a foreign country or you have relatives in a foreign country. They're getting older, they're getting on in age, and they trust you, right? Because you're a swell guy. So they go, okay, we're going to put you on the account with us. The money's not yours. They don't want you to touch that money. They don't want you to use that money. But let's say something was to happen to your sweet grandma and she wants someone to be able to access the money. She trusts you. She puts you on the account. You would have to report it. And that's despite the fact that your grandma is a non-resident alien and has nothing to do with U.S. reporting or tax. It's just from a U.S. standpoint, you are on the account, you have signature authority, therefore you have to report. Another common example is when someone is an employee, right? So maybe you're employed by a company in the finance department and your job is to write checks. And so the company operates in various different countries. It's very common that U.S. companies may have foreign accounts, especially in situations in which they have to pay contractors or conduct business in functional currency, whatever the currency is of that country. Obviously, the money's not yours. You can't just go in there and take out the money, but you have authority to issue checks, let's say, or other authority, but that's the typical authority, right? You could write the check. You have to report it as well. There are some different rules depending on how many accounts you have authority over. If you have authority over 50 accounts, you typically don't have to report all 50, right? There's something you can do when you have 25 or more accounts, but something to keep in mind. So the takeaway from this is that unlike the Form 8938, for example, which is similar, but you have to have a financial interest in the account or asset, for the FBAR, you may only have signature or other authority, still be required to report the account, even if the person who granted you the authority is not a U.S. person. Probably didn't know this kind of stuff. If you're out of compliance for prior years, there's various programs you can use to get into compliance. They're referred to as offshore tax amnesty. If you're willful or you just can't certify under penalty of perjury that you're non-willful, you would do VDP, which is the Voluntary Disclosure Program. If you're non-willful, there's many other options available, such as the streamlined procedures, delinquency procedures, and reasonable cause. We got a ton of free information available on our main websites and our sub-websites. you can always reach out and schedule a reduced fee initial consultation if it's something that we handle here. Again, my name is Sean Golding with Golding & Golding. Thank you for your time. Enjoy the rest of your day.